FutureSpeak, November 8th, 2017. All right, going to get right to it. 23 different futures contracts and the indexes. Lots of stuff to look at. Some things that have changed a little bit. Definitely a firming going on in the precious metals that might mean something. A little bit of a shift potential in there that we're going to see. So that's interesting. Silver definitely stronger than gold. And we have a stock market that barely can even get a single downtick. A few minutes of a minor downtick, and then the buyers are coming in again. So I guess that's not really any significant change in there. However, the Russell is breaking down, so that might be something that's important to look at. As far as the energies go, definitely had a firming in natural gas as the potential for cooler weather is coming, and momentum has improved in there, and I'm going to show that to you. So let's get right to it as we start out in the energies. What you're going to see is my side-by-side chart. On the left side is the weekly chart, and on the right side is the daily chart. We have our cycle analysis in there, the colored phasing you can see on the left. And then our projections are the dotted lines for those people that are new. So let's take a look now as we look at light crude on the weekly chart. Got a nice powerful up move in here that has really extended. It got up to about $58 with just as great strength. That's the 78.6% fib extension right there. You can see if I pull this down, you can see the 100% fib extension that's right here, about just under 60 bucks. There's a potential for it to get there. Now, note the projections that we have. What it looks like is that somewhere in here it should roll over and get a correction. That's into this corrective period here. Note the corrective period here and the corrective period here. Those are the end of the first half, in other words, the cycles that end in the middle, the minor cycle as we call them. So we would expect that there would be some pullback beginning in here, and that would last into sometime early in December. And that would just be a modest correction, and then the next rally up there could be the one that gets to that $60 level. So pretty clear cyclic patterns in there, and it does suggest that there should be some corrective period. Again, we're looking at sometime late November, early December for the end of that little pullback that we see in there. Now we'll take a look at the daily chart, and you can see in here the way this shapes up. It's really powerful. And the momentum in here is very strong. Now you can see right in here, note as I trace out these smaller minor cycles, barely a downtick right in here. I mean, this reminds me of the stock market, not able to tick down. And then right in here, and note the shooting star in here today. So it's starting to roll over. Then it would give you this corrective period in here, another rally, and then the correction into the end of November, beginning of December, right over here. So that's how this daily chart fits into the weekly chart. It could really pull back to, you know, in the 54s pretty easily. That's not all that far in here. And then after that, this is where the weekly cycle turns up again, and also these smaller daily cycles turn up also. So we're looking for this period between now and the end of November, beginning of December, for a choppier period. And note that orange arrow, downside arrow in there. That's our option bias indicator. That is suggestive of the fact that it's reached an extreme overbought level. And we have now sent out our option bias indicator on our charts for the futures to our members. So hopefully you have that and they showed up. If you don't have it, you don't see the indicator on your charts, then you have to write me an email and let me know. So this is suggestive of the fact that we're at a point where it's likely to get into a correction. Again, this is a rising period in the weekly and a potential small corrective period, and this is how it shapes up in the right chart for that corrective period. And the fact that it's overbought is significant. Here is not what I wanted to show you. Sorry about that. I wanted to show you the momentum chart in here. Let me just grab that momentum chart. Boy, I'm having a hard time getting stuff up right now. So let me just see if I can just get this all up right here. I hate when that happens. So what I'm looking for is the momentum chart that I normally show on Fridays that I've now moved over into this video, and there it is right there. So you can see that the green area is upward momentum in light crude. That's really very strong. And when you couple that with the projection oscillator that you see on the bottom, that is telling you very much that it continues to be strong. Every time that you get it's still being way up here in the green, well above the 13-day moving average on the slim ribbon, and this starts to move down towards oversold condition, it tells you that there is not very much that it can give ground on the downside. So that's pretty significant, and that is the momentum chart in there. Let's switch over to /RB, which is gasoline. Really strong upward momentum in there also. Here is the chart here on the weekly. You can see that nice cyclic action also. So these cycles point to the average areas, time frames that the lows can come, and you can see that right in here. Almost perfect. I mean, just amazingly spot on. And now getting up to that 78.6% fib extension area right over there. I don't have the 100 in there, but that would be basically the beginning of the upside target zone. So you can see that there's still a lot of time in here to rise based on the cycle that you see in here. This one rose for about maybe 70% of the time. This one only went up about half the time, and right now we're only about 40% of the time here. So there's plenty of time to rally, and we would expect further upside in here in gasoline. So here's the daily chart, and the daily chart, you can see this immense strength in here, and note the slim ribbon and the strong upward pattern that you see in here. And now, you know, getting up into this close to that 78.6%, it makes sense that it's going to correct. It also makes sense that it's going to be timed similar to what we see in the light crude market. So this low projection right over here is comes out towards the third week of November. So we're going to look for, you know, a corrective period here also in the gasoline market. /HO. Here you can see the look right in here at the 32% and the 50%. So those are kind of low numbers, and this has been extraordinarily strong. And again, the cyclic patterns are very consistent. This really smells to me like it's got higher prices in there in heating oil. And with natural gas improving, that certainly could be the case. So we'll be putting in higher extensions in there if it's able to make any further upside progress. And we would expect it to be able to get up to, you know, 197 area without any issue right in here in the near term. So that's a look at heating oil. And here's the heating oil. That was the weekly, and here's the daily in heating oil. And you can see the immense strength in there in the heating oil market. So now we're going to switch over to natural gas, /NG. And a little bit of change in here. Now, I made a note last week when I did FutureSpeak that it was important that that the weekly pattern, based on the continuous charts that we have, there was a discrepancy between the weekly and the daily, that it held that support. It avoided the breakdown. It barely did it, but it did it. And then turned up, and you could see the strength coming in here. That's pretty significant, and that essentially says that this was a completed cycle. You can see that right there. And now we're moving up and taking out this high. That's very significant, and what it essentially is either a breakout or very near a breakout on the upside, and it could potentially, you know, point up to even significantly higher prices in here. So right now we have it drawn in there conservatively to match these cycle rhythms in the bottom. It really could be much better than we have drawn in there right now as a projection. So this is interesting because we have a cycle shift in here that I think is important to see. Now, this is really messy and hard to see. So the dotted lines are the new cycle that we put in there. and you will note that it's a much more consistent pattern than the patterns that we have now. And it also talks about the fact that this high right over here, as I showed you on the weekly, is either breaking out or about to break out. Now note it's overbought right here, and that's likely to get it roll over and pull back. We think we're going to get a pullback for a few days in here, and then this older cycle, this new cycle, all of that is going to turn up again. So it's very likely that a dip somewhere into this area between 3 and 310 could be a very significant spot to get on the long side. So we think this is improved by quite a bit. We'll leave this older cycle and the new cycle in there for the moment because we want to see which one really takes dominance. And my guess is the shifted cycle is what is taking dominance because there's a lot of clarity in there. Let me just show that to you in here, and you could see this big cycle right over here. So it's right here. You can see that there. And then this big cycle right in here, it's right in here. You could see that right there. And then the next one right here is just beginning to rise. So that shifted cycle has a lot of clarity. Also in the smaller cycles within it, which you can see they both bottomed here. Here's small cycle number 1, small cycle number 2, small cycle number 3, and then the big upward move. So the minor cycles are lining up to a small correction based on the fact that it's overbought and then moving sharply to the upside again. So that says to me that, look for some small pullback in here, alleviate this overbought condition, and then you've got some pretty good move to the upside coming. So that is a look at the energy sector, and I think some interesting stuff, and potentially a much stronger natural gas market catching up with the rest of the energies in here, and a buying opportunity coming up maybe in the next several days. So that's next. What we bring is the foreign exchange markets, FX. We're going to look at the dollar index. Now there's an alignment in here that we've been looking at, which would be the time period that the dollar peaks along with the time period the euro bottoms. And that's not all that far off. And if we're right about that, then that's going to have a stronger message for gold and silver, which are starting to do better. So let's take a look in here at the weekly chart in the dollar index. So you can see, our upside target was around 95, and it's trading basically around there right now. The resistance zone, you can see the very bottom of those resistances is where it's trading. Now, we're getting into a period where we expect that there's a whole bunch of nested cycles that are coming into a bottom in here between January and a little later in the winter right over here. So this is all a nested period of a lot of downside pressure right there. We believe that this is going to roll over soon and then begin to move to the downside in the dollar. The question is when. And now when I look at the shorter term pattern in here, you can see that, well, everything in here still looks quite positive. You can see the slim ribbon, good solid upside momentum in there. There's no question about that. And the minor cycle pretty much drawn for you right in there, and the next minor cycle all living within this bigger cycle. That shows the upward trend that you have in here and this minor support. That says a little bit of pullback maybe in here, and then one more rally. So that rally, we believe, has, a pullback of a couple days, a rally of about a week and a half, and that's when we think it rolls over. So, somewhere in here around the third week of November, and then starting that bigger decline that we're talking about. So let's look at the dollar. So if we're looking for, somewhere around the third week of November for the peak in the dollar, based on the cyclic patterns, then we should be looking for the same bottom in the euro currency, /6E. We like to look at both because we get a much better sense for the timing and to see if the alignments are correct. So look in here, we're in this period right in here of a correction. And that correction, when I point down over here, looks like it bottoms around week 2 or week 3 in November. So that lines up with the top that we're looking for in the dollar. Now when I look here at this pattern on the daily, so I'm just going to blow this up in here, and I'm just going to blow this up right in here. So this pattern in the daily points to a low right over here, right around the, we'll call it the 24th of November in the euro currency. So that would be on the weekly, right out over here with another couple of weeks to go. It looks to us like the euro should chop for a couple of more weeks. That's in alignment with that dollar peak that we're talking about, and that's really good timing. I would say that somewhere around the third week in November, the dollar should peak. It should be a sell area for the dollar, timing-wise, and the timing for the bottom and the buy area in the euro should be also around the third week of November. Now, when we look at /6B, this one looks like it's also getting ready to bottom. Now, the bottom is due in here basically now or in the next couple of weeks. Remember, the principle of variance says that it can run shorter or it can run longer by a reasonable number of weeks. If not, then we have to look for shifts in the cyclic pattern, but this one is still pretty much on time. And when you look in here, it's got about a week and a half right here. This is about the 20th of November right there. And this, you can see this pattern in here. It's just really, really tight. And we think it's going to, finish this up in about a week and a half, or finish this up in about a week and a half. And then you have this big bullish cyclic pattern in here, and the British pound likely to take off in a big way somewhere over there. So that, again, speaks to some problems coming up for the dollar. All of that pointing to second, third week of November for a dollar peak and bottoms in here in the euro currency and the British pound. Pretty good synchronicity when I look at that. So now we're going to switch over to cash markets for the yen, the Aussie, and the Canadian dollar. So for the cash market in the yen, US dollar, USD /JPY. And here's the pattern in here. Now remember what we're looking at, because the dollar is listed first as the dollar in relationship to the Japanese yen. And the dollar has been strong and going up. So that continues to be the case. This is the 61.8% and starting to stall right over there. So note that this is two rising phases in here. And this is a big bullish uptrend that you see right in here for the dollar. You would expect that by this time period it would be accelerating up to challenge this high over here. But it's not. So it says to me that there is some pressure coming in that's preventing the dollar from taking off in here against the Japanese yen. So there's going to be likely a top in here and then a corrective period. You can see this corrective period was a little bit long, but you can see how deep the dollar fell against the Japanese yen in here. We think that this is going to roll over in here and give you this pattern here pretty soon. So we're going to be looking for the dollar to top against the Japanese yen. When I look at this pattern in here, this looks to me still, let me just adjust this right here. You can see that. That's where the cycle bottom came. This is where the upside new phase came. I'm just going to duplicate this and project it out over here. So this is important right over here, because the US dollar is pretty strong versus the Japanese yen. But this is where the cycle low was right over here. So if I grab a price level right here, I can just put a line across right there. And if it gets below that line right over there, that's going to be a breakdown, and that would be the message that the dollar has. I'm going to create an alert with this, that the dollar is not following through on that weekly pattern and breaking down. So I'm just going to put short-term cycle breakdown with that right there, and I'm going to click create. It's crosses below right there. And now we've got that alert set in there, and that will then remind me if we get the breakdown in there, and I know that'll be significant. So that's an important level there on the US dollar, Japanese yen. Basically still strong, momentum still strong all looking pretty strong in there, and it would take a break below that important number for it to tell us that, well, it's stalling at that weekly 61.8% and rolling over. I am looking for that to happen, but the Japanese government, the Japanese central bank, Bank of Japan, is not being obliging to that because they don't care if their currency goes to zero, truthfully. Next, we're going to look at AUD/USD dollar. So this is in terms of the Aussie versus the US dollar. And the Aussie's been very weak. We've pointed out to this negatively configured cycle right over here, and to a potential target at this fib number right over there. It still is remaining moving to the downside. Now the low in here is projected to be somewhere around week 1 or 2 in December. So pretty similar alignment in there also to what we've seen in other currencies. When I switch this over excuse me, to the daily, we had this little flag. We thought it would break to the downside. It did, but it didn't give up a lot of ground. Here is what we expect in here. So, you know, we're looking for a low somewhere out there in December. For now, we're just going to focus on this cycle right here. And you see it ends on December 10th. So what we're going to expect then is that we make a bottom in here. It rallies into this area. We're calling this a short-term sell zone right there because that's likely where it's going to stall on the upside. And you get a trade-off right in here. I think it would be right for this last move to the downside in December. So, you know, we put in the resistance area when we get a period where it's in a declining weekly phase. Then it's a high probability entry in this short-term sell zone right over here because it's likely it won't do better than that and will fail for another move to the downside. So that's why we look at it that way, and we think that the Aussie still has, you know, maybe about a month to go before this bottom is in place. So you sell bounces when you see that happen. The last one, US dollar/CAD, the Canadian, and you can see in the weekly in here that the US dollar has been strong versus the Canadian. Note the rejection level right there. Now that's an important rejection level. Why is that? Because the 34-week moving average is coming right down here to the 50. So this essentially is a big resistance zone. Why is that a big resistance zone? Well, here's your cycle low breakdown here. And by the way, look what happened after it broke down. Just a collapse, right? That is often an area of resistance when it bounces. So you can see how close it is over there. That's the counter trend resistance. And it's starting to roll over here. So what we believe is that the dollar is going to start to get weaker versus the Canadian and have another move to the downside. Remember, this big cycle here is a big negative configuration. The odds are very high that the next cycle will be a negative configuration also. So this speaks to a weaker dollar coming also. Question is, when does it top? When does the dollar top? And, well, you can see it kind of looking like it's rolling over in here already. It's still positive momentum. Note the slim ribbon. It's just getting into it right now. Last time it did, it bounced to the upside again. So this is pretty key. Is it going to lose its upward momentum, roll over? Well, I kind of think it's going to do that. So if that's the case, then we're going to look for a decline setting up in here. We'll see if it has a breakdown, and it's starting to show signs, but nothing all that significant when we look at that. So maybe rolling over, resisting from the right spot on the weekly chart, and we would say the Canadian dollar is about to firm, or is beginning to firm versus the US dollar, or to say it as we have it charted, the US dollar is weakening versus the Canadian dollar. So that's a look at foreign exchange, and I think pretty interesting stuff when you see that somewhere around the third week of November is an important time period. Peak for the dollar, low for the euro, low for the British pound, and potentially a little bit later than that, the low for the Aussie a couple weeks after that. And Canadian looks like it's getting a little firmness already. So that's the summary of the foreign exchange. Switch over to the metals now. We're going to look at gold, silver, platinum, and copper /GC. This has been a messy chart. And the reason it's a messy chart is because, well, I have a lot of analysis on there, and there's been some changes, and we're pretty much like the analysis the way it's been the last weeks, as we haven't really had to do much changing in there at all. You can see in here that the gold market held at a pretty significant area right over here. So that's where this cycle low came, and then it went to a rally, it tested it, and it started to move up again. But here you have, coming into the end of the year, some period of potential correction still. So note the yellow zone comes out to that time frame right over there, and the reason is because we really do have it projected to not take off until January, and that's the best analysis that we can make out of what I think is fairly consistent patterns in here, and that kind of holds the gold market back. But note the way we have the drawn. You could probably get up here a little bit further, close to 1300, high 1290s, before it kind of rolls over again, and then settles in for, I think, what is the next big upside move. So that's a look at the weekly, and I want to stress this because I think it's so important. There's a major flight from fiat currencies going on. There's a fiat currency crash happened already. When you look at it in relationship to cryptocurrencies, I mean, when Bitcoin goes from under 100 or hundreds all the way up to 7,000, that's a crash in the dollar versus Bitcoin. There's a massive structural shift going on in this country, in this world. That shows a ton of fear about paper money, and rightfully so, because the central banks have no regard for it whatsoever. They don't care how much they print. They're all printing it together, basically. So these foreign currencies that you see are in relative balance compared to what you see versus the Bitcoin, the cryptocurrencies, which now has about a $200 billion market cap. I think they're going to crash. Now, I think they've come way too far, and still the message is clear that people want out of paper. That message is a very strong message coming up for the metals. At some point, maybe it's when cryptocurrency has a major pullback, they're going to realize that when you look at a $200 billion market that's inflated versus over $5 trillion market in the gold market, that the store of value, the real safety, is in gold or precious metals versus cryptocurrencies. So I just wanted to put that big footnote in there before we start to look at this, because I think that's an important discussion. And I think that at any time, I say it's sometime beginning of next year, it could happen before that things change in here, and we see more powerful markets sooner in the precious metal markets than these patterns are showing. And I say that because I see that the silver market is starting to show signs of that already. The gold market, not so much yet. Now we can get back to the charts. So here is the one little up bar that we've had in there. It's not all that much to get excited about on this weekly, and we expected that the market would be able to get a pop. So here's the short-term pattern. This is the rally that we were looking for. It gets up into this resistance zone. Note there's a minor resistance and a short term. Just for your knowledge, where those come from is that this is the short-term distance right over here. This is the minor distance right over here. So what we do is we put in both especially when they're this close, and you can see that there's a lot of resistance in the gold market right there. The middle of that is around 1291. The top of the short term is around 1297. None of that would turn anything bullish if it did it. And you see we have it projected in there and then coming down into into late November, and then another whole cycle of harmonic family coming up before we make the bottom. So this is, basically a flag pattern forming in here after a decline, and none of that is very bullish when you look at that. So the momentum still negative that you can see in there, and when I look at the momentum on here, you can see, now I want you to see on this slim ribbon, that it's just now getting up into this slim ribbon here for gold. It's also getting overbought in here when it gets up there, and that makes the odds high, the probability high, that it's not going to be able to get a lot further on the upside. Anything could happen, but I would say the risk reward is poor for more advanced. Now, note the silver market in here. It is now neutralized right there, and based on the message from the projection oscillators that it's not even overbought anymore. So this is clearly a better picture in silver. If I wanted to buy something in the precious metals, it would be silver. It would not be gold, based on what I see in here. So let's just go back to the weekly chart in silver. And you could see almost the same formation in here, right? This looks to me like this small cycle right in here has a couple of more weeks, 3 more weeks, then maybe get a rally up here, and then that one more pullback into the end of the year or early January, and then that big rising period. Now, silver is a better pattern than gold is. It's a better pattern because you can see where gold right over here tested that low, silver is not. So that means that there is, this cycle right over here is being influenced by an upward directional component to it. You can see that. So that creates this pattern right here instead of this pattern right over here. That's of the bullish message. So silver could do better. Silver could take off in here, maybe have a higher pattern like this, come down right in here, and then explode again. So silver is the one to me that looks, like if you had to buy a precious metal now versus waiting for the late December period, early January that I'm looking at, it would be silver, not the gold market. So let's take a look at the silver daily we want to look at also, right? So we can see the short-term pattern. And here again, you see that kind of upward slope going on. Now, this pattern right in here aligns with that shifted gold pattern that I talked about. And I showed you this shifted silver pattern a couple weeks ago. So this is what we're looking at right in here. And that says to me, again, you can see this upward sloping component right there, that right now silver looks better, and silver could still take off and at least get to the top of the short-term resistance at about 1757. So there's demand in here. You can see that it's better than gold, and we would expect that condition will continue, that silver will continue to be better than gold for the near term. Take a look here at platinum and /PL, and the weekly pattern in here, again, trying to bottom in here, trying to get a rally. We could see it getting up to the 38, about 952, but we're not overwhelmed by any strength in here when we look at platinum. And you can see in here, well, that looks a lot like silver, right? Here's right here, 952. So that's the resistance zone. Kind of think it's going to trade up into that area. And we would say minor upward bias during this period now for the precious metals, with silver looking the best. Now, copper /HG, this one actually is weaker. And it was the strongest by far for a long period of time. And you can see the blue dashed line, that blue dashed line, that's the cycle, right? What we're looking at right over here is the DBB, that is the cyclic pattern for the base metals. So we kind of keep that on there so we could see that there is synchronicity between copper, which is 1/3 of the weighting in the base metals, so it should be very close. So here you got the rally in both the DBB and copper, as it should have come. Note this important fib confluence area right there, and that is stopped it. I mean, just like a brick wall. So you might get a little more uptick in here, but we think it's rolling over. Now, when you look at the daily chart here, it really says be careful. Don't be long copper, because there is a cycle violation in here. Now, it just barely ticked under it and then bounced back up. So sometimes that's a fake out when that happens. But this is really a warning. And you could see our projection in here says that, you know, this is not looking great. If it broke out above this level right here, 318, then that would say it tested the bottom and it then successfully did so and then moved up. But right now, it's not a good pattern, and it looks like it's rolling over. And note that little blue arrow right over there. That's a warning that the upside momentum has gone away. And when we look here at momentum on this chart, you could see it right there. The upside momentum has gone away in copper. It's done that before and turned red, and that was a corrective period. So we'll see if it does that again in here. That's a look at copper, which we don't think is anywhere near as good as it was before. /HG. I think in a rally it's a sell. All right, so now we're going to look at the treasuries. Interesting, really interesting in here. We're getting all of this rally in the stock market based on something, some shake out of liquidity and out of the liquidity trap that was in for 8 years, and central bank actions, and just a potential investor mania, and all of those things are moving the stock market up. However, the yield curve continues to flatten. And when the yield curve flattens, what you see is that the 30-year rally is stronger than the 10-year does, or the shorter term, 5-year or the 2-year, and that's what's happening right now. And when the yield curve flattens, it's not good for financials, and it's often a signal that the Fed tightening is getting to a point that's going to affect the stock market negatively. So we have to keep that little footnote in mind also as we switch over and look at the Treasury markets. Now, we thought that the Treasury market was going to rally. We thought it was going to do that based on the cyclic patterns, and it was spot on. I mean, really excited about, you know, how well that worked. And here you can see in here the dashed line. That's the one we're looking at. That's the idealized cycle bracket that extended in length to 15 bars. This is the old one right in here. We leave it on there. It's had a little bit of effect on the market, so we're going to leave it for now. But really, the dashed one is the one that's very dominant at the time. The bottom due in here, based on that 15-week cycle, you can see that. And then the rally due right in here. Here's how it's shaped up. Now, the rally's not explosive, and it's still underneath this resistance zone right over here, but we projected that it was going to get up into the bottom of this area around 25.20 this week, and it so far has gotten up to 25.16. So it's going in the right direction, pretty close, and you can see we have this kind of flat. We don't really think it's going to be explosive on the upside. The only way it would be if the stock market rolled over into a sizable correction. So right now we're keeping this as a conservative estimate, getting into that resistance zone over the next month. So that's a look at the weekly pattern. Now, take a look here at the momentum here, and you can see it just kind of turning purple in here as it was in downside momentum for a long period of time, and now it has improved by a little bit to going neutral right there. So when I look at the /ZB, because the flattening of the yield curve, the ZBs are stronger. Now you could see it's a sharper advance, also off that 15-week low. And this one we anticipate to get to the top of this resistance zone around 55.12, or even better than that. So it's the no inflation Fed tightening scenario that has this going on, where the longer term is stronger than the shorter term. And you can see in here, note the ZBs have turned green on momentum. So that was real clear. The ZNs were only at purple, which is neutral. The ZBs have turned positive on momentum. So there's your clarity in there. And if you got a day where the ZBs pulled back a lot sharper than the ZNs, I would do that. I would buy that knob spread and buy the bonds over notes That would be sell it, buy the bonds over notes. So the that pattern in there looks like it worked really well. Take a look here at the daily chart, and you could see rallying the dashed line again, following it well. Here's your upside turn in the momentum, and this looks a lot more solid. This could get past this level of 55.08 and even up to this resistance up over here, because it's a lot stronger than the 10-year note. So that makes a lot of sense to you, doesn't it? As the inflationary scenario is not powerful, right? There's not a lot of inflation, and that might change, of course, down the road, especially if the dollar goes into a collapse. The other aspect of that is that the stock market is still strong, so the minor advance that we're seeing here in the bond market is coming at a time when stocks are strong also. So there's still a potential for upside that we're not aware of here in the bond market once the stock market does roll over and go into some real correction. Yes, we will have corrections, I promise you. So let's take a look at the stock market, SPX. What's interesting in here in the stock market, well, besides the fact that there's never a downtick anymore, is that the Russell is breaking down. There's something going on there, and my best understanding of markets says to me that it's about the yield curve. It's about the financials weakening, and the financials are 18% of the Russell, so that's the heaviest weighted category, and that's what is likely weighing on the Russell versus the rest of the market. So here's the S&P 500 SPX, and you can see that the movement up here has gotten now through these multiple fib extensions right there. So I actually don't, I haven't posted another one up in there. I'm not sure where that next resistance is. I'll have that for the next time we do these charts. And at some point near the intermediate and long-term patterns are going to catch a hold and give you this correction. We still project that to be completed by about the first week of January. So we have about 2 months for a correction to start and end, based on the long-term pattern on the monthly and this intermediate pattern that we see in here. 21 months off of the last major low. The last time we had anything like this was several years ago, and it was it ended several years ago. It was a 22-month period, and it was a very brief correction, just a matter of a few weeks. So maybe that's what we're going to get. Here we look at the short-term pattern, and here we were looking for a little dip early in the week and then another rally. We did not get a dip, not anything that was measurable, couldn't even get to that 13-day moving average. So still immense strength that we're seeing in here. We still think it's a few days out and then it rolls over. That was our projection, though we didn't get the dip that we were looking for. So still just immense strength. Here you can see here the powerful action and overbought condition that we're looking at right in here in the S&P 500. So when we look at the NASDAQ and the X, we'll switch over to the weekly. And here you go. And here we get up through that fib projection also. I don't have the 100 in there. I will put that in. And the pattern is still suggestive of the same thing, this correction into about the first week of January when the sellers do finally come in. When you look at markets like this, the market is extending up in a way that only happens in very, very rare circumstances. 43 years I've been looking at markets. We've seen anomalies like this that have happened and they end. There's a structural change without a doubt that's happened in here. When you look at extreme low implied volatilities, the action of central banks in the markets and high frequency trading that creates immense depth, all of those things have taken essentially the noise out of the market. So there's some aspect of structural change in there still. The structural change that is influencing the market up at the moment in a very steady fashion and very long period of time will do exactly the same thing when it turns around and moves down. So the hardest thing might be, and anybody who's short the market now will never believe this, but that when the market starts to decline, that the buyers step in way too soon, the short coverers cover way too fast, and the nature of the rising market that we see now goes into the declining market, and it declines for long, steady periods of time. So remember, I'm the one that said that when the market starts to roll over, it might scare people on the downside because of how consistently it falls. Tough call to make right now when you see the market that just won't tick down. So let's now switch back and we look at the daily chart in the NASDAQ. So what we're looking at in here, and we're trying to make a case, and believe me, there's a lot of fudging of cycles going on here because it's so hard to read this, is that this little cycle dip right in here was this one right here and ended early. If that's the case, then this is soon going to peak and then roll over. We're looking for a small corrective decline into around the 20th of the month. So that's a couple weeks from now, a week and a half, then another rally, and then we think it takes the downside takes over out over there. So we don't think that there's much left to this at all, and it will, it could prove us very wrong because it's not able to tick down very much whatsoever. So we have to, at this point, just guess and project out the cycles as we best understand them. And that's what you see right over here, that we have the expectation of a peak pretty soon. So take a look here at the Russell RUT, and you'll see something quite different. So the Russell, like I said, is already turning over. You can see that right in here. This projects out to about the third week of December for that cyclic pattern and this correction. So it's got about 6 or 7 weeks aligned in here on the downside. Maybe that's going to be what the whole stock market does. When you look here at the pattern in here, we have a cyclic violation right in here. That's the breakdown. So the low that we saw in the other indexes all came right around over here. They're still rallying, and we're looking for them to turn over, right? Showed you that. This one turned over and broke down. So that's maybe the first sign that there's something going on that is negative. Look at the momentum in here. This is the only one on a daily basis, the short-term momentum, that has neutralized. In other words, it's given up its upside momentum. When you look at the S&P 500, SPX, you've got that monstrously powerful momentum, though overbought. When you look at the NDX, the same thing, monstrously powerful, not quite overbought. And right over here, 3 days ago, 2 days ago, you got a market forecast sell signal. So sometimes you just take a few days to click in. That's important. Now, there is this a market forecast sell signal here? That is barely. It almost qualifies. So there, at that point, it took about 3 days or so to make the top, and then it went into a pretty good correction. So if you want to look at this one over here, that's a solid market forecast sell signal. Let me just show those to you and point at them. Here's one right over here. That's a solid one. Here's the one right over here that was questionable right there. Just missed. Yeah, it's got it. And here's one that's solid right over here. So when this one happened, there's your correction. This was in the S&P 500, a 70-point decline right there. This was a more minor decline right over here. I'm sorry, this was 78. This was 70 right there. And here we're just getting this overbought signal right over here. So there is some sense in here, and that's why I'm telling you I think it's pretty soon that there is something about to start on the downside. It would be a probably steady decline that will surprise everybody when you look at that. One more thing I want to show you in here is this chart right over here. So this is the intraday momentum. And I used to show this on Fridays. I pulled it out of there because that show was too long and it was giving away too much free. How do you like that? So this is now for our members, and you can see in here on the intraday that the S&P 500, the NASDAQ, and the Dow Jones are still very strong. But here is your horrible action that you see here in the Russell. So if you're looking at a four-legged stool, well, it's only operating on 3 legs right now. And we'll see if another one of them break down and weaken. So that is a look at the stock market. Next thing we're going to look at, or the last 5 charts that we're going to look at, are the grains, coffee, and cotton. I'm assuming that lots of you at this point turn this off because you don't really pay that much attention to it, but I do have some members out there that are very interested in those markets, so we keep bringing them. So I'm just switching these charts now over to little shorter time frames because we don't need the longer ones. And I'm going to switch now and look at the corn market /ZC. Now the corn market we had believed was getting ready to put in a bottom, and you can see based on the patterns in here that that looks like it's the case. So here was where the idealized low lined up, and you can see it's finally starting to not move down anymore, but it's not able to move up very much. So if you follow the rhythms and the cycles, you can see this, and this, and this all influenced by a rising directional component to the cycles. All very clear, right? So each of these was influenced in that rising manner, hence the stair-step upward move. Then when it broke this low, it turned bearish, and this decline, of course, was much stronger. Now we're at this point of bottoming, but note we only have it drawn up to rally to about 370, 23 cents or so, because of the negative configuration overall. So we're looking for a rally in what is not a great overall picture. That's kind of a big picture that we see there. You can see in here that we're kind of building a base. We're starting to do that in here, and it points to the fact that maybe just in a couple of days this is going to get ready to turn up. So I would look for upside here in the corn market, that 20-25 cents we're looking for, potentially coming, well, real soon. Take a look at the wheat market. Now the wheat market is different. I mean, it's clearly a different pattern. It is suggestive of the fact that this cycle really moved, didn't it? Man, I hate when that happens. So now you can see it's aligned properly. Occasionally on TOS, those cycles break loose and they slide over somewhere, and then we have to grab them and put them back. So you can see in here an important low coming in a month. So you can't get very excited when you look at that. It just doesn't look ready, and it's still stair-stepping its way down here on the daily. So not excited here when I look at the wheat market. The soybean market we've liked more, and it had a much better pattern. You can see in here as we've drawn it bullishly. Our objective originally was $10 and then $10.20. We still have that drawn in that way, and expect that before this is over with, we could get that pop. Now note out here, after some correction down into December, we think there's even a stronger period coming. Here is the shorter term pattern right in here, and the pattern is solid, right? We've got right now you can see the momentum switching to positive right in here. This was an engulfing pattern, and it didn't get you much downside. The 89-day moving average is just a perfect support for it, and now moving up. So we think it's going to blast off in here, get above there, come down, have another move up like this. That's these patterns right in here. You see that? So soybean looks pretty solid to us, and we think that up move that we're expecting is not that far off. In fact, it might be happening right now. So now we're going to take a look at Joe. Have your cup of Joe today? Well, here you can see that you might want to fill it up a little more because there's a low bottom coming in here. A low bottom. And it looks like a week or two potentially, and then turning up. If you understand cyclic theory, if this bottom in here ends up above this bottom right over here, and it looks like it will, then this will have all been a base, and the likelihood is that it will get up back into this resistance zone. So there's a potential for a strong coffee rally to start in just a brief period of time, a matter of weeks. When you look at this pattern here on the daily, right in here, you can see it's still moving down, right? The direction of this cyclic pattern was down. Now it's, looking like it's bottoming in here and going to get a bounce. So this next one ends on December 11th. What we're guessing is that there's going to be a rally in here, another sell-off, and then after December 11th would be the bigger rally on the upside. But we think that coffee is going to be buyable very soon in here, another week or so or less, and then getting a pop to the upside. So it looks pretty good to us. Cotton, we pretty much analyzed this one as good as anything could be analyzed. We thought the bottom comes right in here. We saw an abandoned baby right there on that weekly pattern, and that it was about to move up. We think that it is moving up and likely to get a good upside move. If it happened to come down and break 43.56, that would be the end of it. It would be extremely negative if that happened, but right now it looks up, not down. And here you can see right in here a base that's building. So here's your low right over here. It looks like about a week and a half period of time, moving sideways right there, and then moving to the upside. So the weekly bottoming over here, or having already bottomed, 3 weeks off that low, that's all this right over here, and then another maybe weeks period of time, the base will be built, and then likely to be able to move to the upside for that expected pop into that resistance zone way up over there near that 47 number. So that's a look at the cotton market, and that's a look at all of it. I hope there was great information for you in there. If you have any questions about what I brought, make sure you send me an email. And if you have any additional information ever on anything that I present that would enhance that which I share with my viewers, make sure you send that along also. That's it for FutureSpeak. I'll see you in the next segment.